Okay, great. We are looking good. All right, guys. We have got a really interesting and fun webinar today. I've brought on John, one of my mentees from the Thailand mentoring program earlier this year. It's going to be really useful and educational because, as you've seen with our other webinars that we've had, where we've put them on YouTube, where we've brought on students, former mentees that myself and other mentors have presided over in terms of teaching them how to trade. These guys have done really well. And what you guys are seeing is a small microcosm of a very big community. We've got 1,500 traders now at ITPM globally, and a very, very high percentage of them make money, and a very high percentage of them do very, very well. Okay. Why do we put these out? Because it's an example of how to do things. If you guys can actually see what the end result looks like, you can understand the pathway that needs to be taken to learn how to do this properly. So I brought John on today. Should be a very interesting presentation and very educational for you. I'm going to share my screen now, guys. So I'm going to need you to tell me if you can see the screen properly. So what will happen is I'll do a quick intro, and then John will jump on and take you through everything that he learned during his mentoring program. Okay, looks like we are good to go. People are seeing it. Fantastic. Okay, so guys, I'm not going to spend too much time on my resume. Cut a long story short. I was a professional trader on pan-European equities trading desks at Goldman, Lehman Brothers, JP Morgan in the early to mid 2000s at a young age. So basically 21 to 28 years old. Left the investment banking industry, pretty much did nothing apart from make a TV show for 3 years. Started back up again in the UK and built ITPM from the ground up. So, as mentioned earlier, we're now very international. We've got over 1,500 traders. We're managing in excess of $100 million globally, and we keep growing. So who knows what it can become? In terms of the education side, that is the front door to the organization. So if you want to join ITPM, of course, if you're a first timer, you can join ITPM by simply doing our introductory program, which is really not a lot of money. We'll talk about that later. Introductory program gets you through the door, or even just online programs. And then you have an option to join later as an institute trader by depositing money in your trading account. So this is what John did. John will take you through his story a bit later. But, John coming in, I mentored him on the Thailand program, starting at the end of April earlier this year. And we live traded together from the first week of May till the middle of August. So we stretched out the mentoring program a little bit longer than usual. But yeah, we basically traded 4 options expiries. So we're very, very heavily in equity options, stock options. Okay. So the question is what are we actually trying to achieve on mentoring programs? Of course, people can do the online programs. That's all fine. But if you want to do one-on-one training after you've done the online programs, then you can choose from any of the mentors at ITPM and complete 12 weeks of mentoring live. So you're basically on the phone every week for a couple of hours, and then there's usually about 10 to 15 hours of work in between telephone calls. So you can actually hold down a full-time job doing this, okay? So we try to obviously kill many birds with one stone in terms of like solving the problems of retail traders. The main one is misinformation. So giving you the right information and the right experience to do this properly. But also, most retail traders obviously have full-time jobs or run businesses, small businesses, whatever. Trading comes down the pecking order. It comes down the list of priorities. To learn trading, you've got to bring it up the priority list. It can drop down later when you become good at it, okay? So if you want to put your job, your business first, that's fine. When you're learning trading, it's got to be on an equal footing. So you have to dedicate, a good amount of hours to this until you know how to do it properly. Then it can drop down to below family, below hobbies and interests, or alongside hobbies and interests, okay? But until you know how to do it, it's got to be a priority, okay? So what are we actually trying to achieve if someone does the online programs and then decides, okay, like John, I want to actually do a mentoring program? Well, we're implementing what you learn in terms of the theory in the online programs, okay? But then we're trying to get you to an advanced level of competency in a bunch of areas. So you've got to be really good at macroeconomics. You've got to be really good and consistent in terms of the quality and quantity of your trade ideas. We're trying to get you to a point where you really understand options to a professional level, and you can structure trades really optimally and realize what is the right trade to do once you have an idea in the options market. So obviously when you have an idea and then you bring up the options market and have a look at it and scan all of the options calendars and prices, etc., how do you know what is the optimal trade? We need to get you to that point so you know all the time how to do it properly, okay? Building a long-short equity options portfolio, being competent at doing that with call and put structures, all the methods of putting the odds in your favor, week-to-week risk management, how to run the portfolio properly, your decision-making processes over risk management, implementing the winning habits, very, very important. So getting into good habits of good execution on entries and exits. So instead of being the typical retail trader of selling everything at the bottom and buying everything at the top and panicking, we get rid of those losing habits. We introduce winning habits, and you get used to winning, okay? And really what it comes down to, once you know all of that, is managing the business properly, okay? So showing you how to actually get the equity curve to go up every month and managing the business properly and getting high-level statistics, okay? So you might have seen this in previous presentations, but it's worth going over, okay? What we're trying to achieve here is to create people, retail traders, create those retail traders into people who can actually achieve these numbers, okay? So statistical significance, about 150 trades in 1 year, okay? We want people, because we're trading options, to be targeting 50 to 100% return a year on their capital, okay? But it can be more. There's no upper limit with options, okay? So it can be anything. But if you implement what we teach, do it diligently, you should be landing most of the time somewhere between 50 and 100%, okay? A win-loss rate, 60-40 is about right, but you're going to be targeting 65-35. Your R score, which is the dollars you book on your winners divided by the dollars you book on your losers. We're having a minimum threshold of 1.5 at ITPM, but we're always targeting above 2, okay? Portfolio volatility, underlying portfolio volatility. If your portfolio was made up of stocks, so stock positions, long stock positions and short stock positions instead of equity option positions, calls and puts. If instead you had long stock and short stock positions, what would be the volatility of your portfolio at the end of every month? So we can track that when we look back over 9 months, a year, okay? So you need about 9 months of data before you can do that properly, okay? We're targeting somewhere between 20 and 30%. And then we're leveraging that up with options. So when we leverage that up with options, it should be on average around 3 to 4 times, okay? So if you do this properly, you should be landing between 50 to 100 or even more, because there's no upper limit with options. In terms of the average days in a trade, you're looking at 20 to 25. Most people who do this properly at ITPM over a period of time will land somewhere between 20 to 25. But of course, there's acceptable variation because it goes down when we're in very volatile markets and it goes up when we're in very low volatility markets, okay? But there's a very, very key thing here that I have to talk about briefly when it comes to retail traders getting excited about potential returns. Okay, we always get messages from people, and I'm sure, if I don't mention this, we would get people asking questions on this webinar. The question would be something like as follows: Anton, what type of return should I expect if I come to ITPM in the first year or in a year? Something like this, right? Well, I can tell you now, if you don't follow the process and don't do the work, you should expect nothing. In fact, you might expect losses, okay? It really comes down to doing the work and actually focusing on the process, not the returns, okay? If you focus on the returns and not the process, you won't make money. Get the process right first, okay? And the returns will absolutely follow. This is the pattern we see over and over and over again. All the guys that come in to ITPM, who do a mentoring program, who do the online programs, who focus on getting the process right in the first 3 to 6 months, they all go on to do very well by themselves, okay? The guys that don't do so well or struggle in the beginning are the guys that don't focus on getting the process right. Put all your energies into focusing on getting the process right. The returns come later. So with that, guys, I'm going to hand it over to John. So John is going to take you through everything he did on the program and what he learned. And then I'll come back in towards the end. We're probably targeting about 90 minutes maximum in total for the presentation. And we'll do a Q&A at the end. So take it away, John. I'll unshare the screen.
Thanks, Anton. Hi, everybody. Okay. So just to give you a bit of background, introduce myself. I'm based in the UK, born and bred in the UK. I completed my schooling in '91 and went on to do a degree at Leeds, a European Finance and Accounting degree. That was completed in '95. So I've got some sort of a numbers background with a bit of language in there. I then went on to, in '96, I went on to work for EY. So I was working in audit and corporate finance for one of the big 4 professional services firms globally. And while I was there, I completed my ACA, which is a chartered accountancy qualification, so I'm professionally qualified. Was with them for 7 years, worked in audit and corporate finance, and then I went into industry for a few years, and I worked in a big FTSE food company. So I went from professional services into on the sort of corporate track, as a lot of people do. By 2005, I pretty much decided that's not what I wanted to do. So I had quite a big shift and learned how to become an executive coach. And I've been doing that ever since. Over the last 20 years or so, I've been coaching people and working with businesses on corporate and organizational cultures. That's my specialism. But I've also got involved in helping to set up, grow and run family businesses as well. So we've got a few businesses in the family in different sectors. I'm involved in a bunch of those. So I've had a reasonably kind of broad grounding in business, different sectors, different businesses over the last 25 years. Turned 50 last year, and as you do when you kind of hit a milestone like that, you start looking at what you want to do with the time you got left. So I started to take an interest in trading and looking to make investments on the side. Came across the Institute, which was, quite a crowded marketplace. I was getting a lot of adverts from people you've probably seen online offering shortcuts to gains. Fortunately, I came across the Institute and chose that. And I did my my online courses latter part of 2023, and I attended the Thailand Trader Mentoring Program in April. So I flew out to Thailand in April and did the classroom out there. And then I came back and I started my mentoring with Anton at the beginning of May. Okay, so this is what the classroom looks like. It's not your average classroom. There's me on the left. That was day one, I think, and a good bunch of guys I was with were still all in touch with each other and communicating regularly, and part of quite a strong network of alumni within the institute. This is a screenshot from my TradeStation, my trading account, at the end of the first month. So I flew out to Thailand on April the 18th. At that time, I deposited $97,404 into my TradeStation account. Sounds like a bit of a random number, but it was actually 80,000 UK pounds. That's how it translated. So you can see that number there with the red arrow. Whilst I was in the course, we were working on trade ideas, and I presented an idea for ADM to the classroom and to Anton. He liked it and said, "Okay, let's go. Let's buy some of those options." I put in an order for 2 puts just to leg into that trade, and that's why that $435 is sitting there as a reduction in my equity. So at the end of April, I'm sitting on $96,968, and then I'd come back to the UK and start my mentoring with Anton. At the end of the mentoring process, August 17th was my final day. There was an expiry on August the 16th, so a lot of work was done up until then. As you can see there, my net equity at that point had increased from the $97,404 to $154,148. So I actually put on a gain of $58,558 in that 3.5 month period. And when you take off the commissions and trading costs, my net fund was $154,148. So I'd increased quite a bit in that 3.5 month period. This is like a snapshot of my performance. So what we do, what we talk to at the Institute is to capture data around your trading stats and your trading performance, and to monitor it on a weekly basis. It's really good routine, because what it enables you to do is just take stock of where you're at, help you to create a plan for the week ahead. And you can tell a lot about how things are going by looking at some of these stats. I'll go into a bit more detail when I go to my spreadsheet, but essentially what this is telling us is that I started with 97,404. I made the gain of 58,556, and so that's a return of 58.3% over that 3.5 month period. So capturing this and capturing other stats just helps us to keep on top of what we're doing. It means that we're less likely to make stupid mistakes like overtrading or not getting our correlation right or anything like that. So we do. There's quite a bit of just monitoring and making sure we're on top of our data as we go through, and we're not just blindly putting trades on it when we fancy it. We also keep track of our equity curve. So what we're looking to do is to try to create a trend line which is going up in the right direction, left to right. It's never going to be smooth, because as we trade, we make wins and we make losses, and some of those are bigger than others. So it always does zigzag a little bit, but the important thing is that it is trending in the right direction, upwards, left to right. As you can see, this is mine over that 3.5 month period, 35 trades, some big wins, some reasonable sized write-offs, but ultimately it's going in the right direction. That's my profit. And here's my fund, my actual portfolio value. So you can see where I started on day one, and then it does go up and down. But if you look at sort of every half a dozen trades or so, you can see it goes from 93,000 to 95,000, and then on to 114 after 12, and then 135 after 18. So it's moving in the right direction, and that's what we're trying to maintain. So I'm just going to switch and pull up my spreadsheet. So what we've got in this spreadsheet, first of all, we've got we take a dump of all of the trades that we've done over that period. As you can see, there's more than 35 there. There's like 120, but that's because we don't, if we're going to buy 20 options in a particular stock, we don't always do it in one go. We might leg in 2 or 3 or 4 stages just to make sure we're not caught by a sudden change in the market. So that's every trade that I did over that period. Some of those were still live when I finished at the end of the mentoring process. And some of them I closed out and made a profit or loss on. So that's all of the data from my trading account from TradeStation. Got my equity curves in there, but this is the important sheet. This is the one that tells you how I actually did. So I'm going to go, if I start at the top, and this is that summary of my performance. What you can see from this is I did 35 trades, and 23 of them were winners. And the profit I made in those 23 trades was 106,454. And 12 of those trades were losers, and I lost 47,896. So what we can see already is that my win ratio is pretty respectable, 65% win ratio, 34% loss ratio. That's pretty much in line with the target. Also, the value of my wins was per trade was a little bit higher than the value of my losses, so that's an additional benefit. And if you take the total value of my wins versus the total value of my losses, you come up with my R score. In Anton's spreadsheet, it said minimum 1.5, looking for over 2. Mine at that time was 2.22. So again, pretty respectable, pretty happy with that. And going right over to the right-hand side, you can see that those numbers you should be familiar with now. My starting initial capital, 97,404, and my profit over that time, 58,558. So a return on capital of 60%. And the average days that I spent in the trades over that period was 26. So again, kind of in line with what the institute would like us, where the institute would like us to be. So then let's have a look at some of the trades that I did. I'm just going to pull out a few to use as examples. So first one I want to show you is the Monday.com, which is highlighted here. So Monday was the first trade that I actually made a reasonable amount of money on. So it was, I kind of never forget that. This is my first time trading. I've never traded before I came to the institute, so it was a very new experience for me. So Monday, I went into that position on the 13th of May. I bought 5 contracts of the 185 strike. I was expecting it to go up, and I sold 3 contracts at 195 to pick up a credit and just to hedge myself a little bit. That was on the 13th of May. The company reported 2 days later, and they smashed their estimates. They produced a really good earnings report. The market responded positively, and I had to sell because I had profit on the long, but I was in danger of crystallizing a loss on the short at the expiry date. So I sold both legs. I made $9,610 on the long and lost $4,965 on the short. So I made about $4,500 on that trade, and that was a great feeling. It's not a fortune, but it's a reasonable amount of money. It was a great feeling to get that right. So if I go across and to summarize May, overall in May, because I picked up some credits, I made a profit of 7,452. Now we go down to a bit further. If we look at this trade here, which is another one that's highlighted, Bumble. So that was, I bought puts, so I was expecting the Bumble to go down, and I'm going to talk a little bit more about the thesis on some of these trades when we go back to the presentation. I bought 100 contracts of Bumble in June, June the 20th. The expiry date for those contracts was the 20th of September, so they were a reasonable amount of time to run. I was in the trade for 46 days, so quite a reasonable amount of time, but it was moving downwards a lot over that period, and I was waiting for them to report. And when they did report, they had an absolute nightmare. The stock bombed, collapsed, and I made a 647% profit on that $5,000 trade and made $32,000. Looking down again, I went back into Monday again, in that month. I went in on the 5th of August, came out on the 15th of August because Monday was such a strong business, it was just trending upwards all the time. And I made more money on that trade. I made 12,698 on that trade, just being in there for 10 days. So I made overall a gain of 5,000. And if you look at the orange trades here as well, you can see Hyatt Hotels, GigaCloud, and Tesla at the bottom. Along the way, there were some write-offs. There were some trades that I picked which didn't work out for whatever reason. They either went the wrong way or they didn't move enough and they expired worthless. So I had a few write-offs, but if we go across, we can see that the value of my write-offs was outweighed by the gains I was making and the credits I was picking up. So in July, I made 9,222, and in August, I made 39,319. And some of those we call maintenance months, and others we call abnormal, but I'll explain a bit more about that in a bit. So that's every trade that I took out and closed and completed over that period of mentoring. And so I still had some trades live at the end of that, which I've been working on since. And I might talk a little bit about those in a minute. So back to the presentation. I want to talk a little bit about sort of the mindset and the way that we do this, and the journey from the beginning to the end on an expiry by expiry basis, because that's kind of how you think. You're thinking about when the next expiry is coming up and what your exposure is at that time. So for the May 24th expiry, bearing in mind I started on the 4th of May with nothing, with Anton, the idea was about building the portfolio up and just generating lots of trade ideas. So going to Anton at the end of the week, here's my trade ideas, what do you think? Discussing them, selecting the ones we were going to put on, and then trying to find a good structure for them. So I was putting on trades. As we went, we were raising credits. That's really, really important. I raised credits on Hyatt GigaCloud on Monday, made $4,500 on those. As I said before, Monday jumped, and I made reasonable money on the net position there. My profit for the month was $7,500. Now, I was pretty happy with that because I was such a newbie, but Anton reminded me that's just a maintenance month. 7,500 or 7.5% is not spectacular. It's okay. You know, you need that because the mindset is that you're running a business here and you want to be making profit every month, but you need to keep those maintenance months going and wait for the big one, which is going to come. So there were no big payers. I was just ticking over and making profits in those early stages. So I was happy. But the objective is just to keep the equity curve moving in the right direction, and that's what I was doing. Monday.com, why did I choose it? Well, some of you will be aware of Monday. It's a software business. They make collaboration software for businesses, for teams. They'd had a pretty poor year in 2023, but I could see from the research I've done that they were making good progress. There was momentum behind their sales growth and their earnings growth for the coming year. They were adding new products to their portfolio and investing in AI, which is obviously very important at the moment. And the KPIs that they had were showing the growth in the right areas. The annual recurring revenue was growing, and their net dollar retention was growing as well. So they were hanging on to clients, and their clients were getting bigger. So I thought I'd have a punt at that. Here's what happened. So I was only in the trade for 3 days. They reported, and you see the gap there is the amount on which they jumped on that day when they reported. Sadly, I had to get out because I had to cover the loss on the short leg in order to make a profit. And I missed a little bit of upside there, but I still made a reasonable amount of money and I was happy. And if you look at this, that curve keeps going up. So I was keeping an eye on them, and I went back into Monday 3 times over the duration of the mentoring program. I made a total of 8,623 net profit, but I made nearly 20,000 on the long legs alone. So I was chasing that one quite nicely without overdoing it. So then came the June expiry. So my book is starting to grow. I'm now looking through June to really build the book. So I'm coming up with more and more trade ideas. Anton's pushing me to get those ideas raised. Because we're building the book and putting lots of trades on, I'm raising credits all the time. I've got 5 new new trades in that period, $7,000 worth of credits. I had a write-off. Hyatt Hotels was I backed the wrong horse there, so I lost $7,000. But I had some good movers on things like yin. Yin moved well. I got 8,450 on yin. On the long leg, 3,980 on the loss on the short leg, so I made about 5,000. But you know, it's not about necessarily losing money on the upside. It's about trying to remain agnostic so that you're making money whether it goes up or down in the way you structure the options. Because I made that loss on Hyatt, I traded out of my Lululemon puts, or some of them, in order to cover that. So I had a good trade in Lululemon, which I'll talk about in a sec, and that made some money for me, which I was able to use to make sure I made a profit in that month. So I actually made 2,500 that month, thanks to the Lululemon trade and the credits I'd raised. And that just reinforces the importance of making those credits. So why did I choose Lululemon? Well, it was a business that had been really popular and was a high growth business in the year before, but it was starting to wane. Its sales and earnings were still growing, but the growth was decelerating. So it was looking like an ex-growth stock. And when you looked at it in more detail, you could see that the actual growth it was achieving was actually through new stores being opened, and the like-for-like store sales were declining. So again, the market doesn't like that. It's a sign of the stock going ex-growth, and it's a sign that people were becoming less and less enthusiastic about paying $100 for a pair of yoga pants. So we identified it as what we call a phase 2 short. It's gone over the hill and it's now declining. So we put on some put options. Here's what happened. I picked up a credit on the short leg and then waited till it dropped enough to make me a total gain of $9,050. So that was a really good one. I mean, if I got in earlier, I might have made a bit more. But you know, you come across the stock, you analyze it, and you make a decision based on where it is at that particular time. So my third expiry was July. Still raising credits, still putting on trades, and I want to just highlight a couple of really important trades I made in July. So these weren't standard trades; these are what we call tail risk trades. So these are ones that have massive opportunity in them, but are perhaps less likely to come off. They're based around a certain event happening, and if that event happens, you can make a lot of money on them. So one of them was Bumble, the dating app. We identified that as a declining stock, and we piled in because the contracts were just 50 cents each. So we bought 100 contracts, $5,000, and then subsequently sold them for a 647% gain. I'll talk a bit more about that in a minute. The other one I put on was Ericsson, which is, I guess, a better known company. It's been around a long time, used to make mobile phones. I saw that as a potential turnaround stock. It had been dropping over 2 years, and it looked like it was starting to turn itself around. So again, I piled in there. The contracts were only 16 cents each, and I bought nearly 300 of those, and I sat on those for a good amount of time, and ended up selling them in October for nearly 30,000 profits. So that was another really good trade. So also in July, I closed out Lulu, as I've just mentioned. I made a profit on KB Homes. So that's a home building business. We looked inside the home builders ETF, and we could see that that basket of home builders was starting to increase. It was showing momentum. We picked KB because it was regularly announcing good news to the market, which are positive catalysts, and we thought it had some potential. We put a trade on and we made $8,000 on that trade, so that's really good. Overall, we made 9,222 because we had a write-off. Again, sadly, that's what's known as a maintenance month, but again, not too shabby in July. So Bumble, why do we choose Bumble? Bumble's a dating app. I don't know much about dating apps, if I'm honest, but just looking at it, you could see that the business was starting to falter. It never really got going, to be honest. The operating side was poor. The business model was just bonkers. Anton's done a really good webinar on this, which you can find on the ITPM YouTube channel. but they were getting it wrong, and they weren't showing any signs of turning the business around, and every decision they made seemed to be making things worse. So that was sort of the story of the operation. The business itself, if you looked in the numbers, it had a balance sheet of 3.6 billion worth of assets, a market cap of 1.75 billion. When you looked at the detail of that, 3.2 billion of that 3.6 billion was actually goodwill, so it was intangible assets. So it only had $400,000 worth of tangible assets on a market cap of 1.75 billion. And when you look at the operating side of the business and the business model, you can see that goodwill wasn't really worth anything. So the business, it was a bit of a no-brainer to put a short on that one, which we did. I held on to those for a while, but as you can see, what happened in August when they reported, the stock absolutely collapsed because the market was kind of expecting it, but it was worse than the market thought. And my spend of only $5,000 returned 32,000 profit for me. So that was a good day. So my final expiry in August. So the last expiry date was the 16th, and I had my final mentoring day with Anton on the 17th. I picked up some more credits. Again, that's the thing. We need to keep picking up credits every month. I had quite a few wins in that month. So I won on Expedia, and I won again on Monday. Lulu, we've talked about. Bumble, we've talked about. I did have a couple of write-offs. So I had Tesla and F&D. I had write-offs for those two trades, but to be expected, I had 4 positive trades in that month, and I finished the month with a net profit of 39,319. So that's the big month I was waiting for after 3 maintenance months. So just to summarize and sort of give you the lessons that personally I think resonated most with me. I went into this with a mentality of I don't know anything about trading, and it was quite an advantage to me because it meant I could just sit and listen and not second guess what the guys were telling me. I had this idea, I'm not going to pay good money for this and then just ignore what they tell me. I followed it really closely. I took it really seriously. And if anybody's thinking of doing this, I'd encourage you to do the same. I can't pretend I found it easy. Some of it I did, some of it I didn't. And there's always going to be things you find difficult. But I found if I just worked through them using the information I was given, practiced them, lent on my mentor, lent on some of the other guys in the group, I eventually got through them and worked it out. And it does get a lot easier. I was finding it was taking hours and hours and hours to come up with a trade idea to start with. But ultimately now it's probably taken me an hour or two to get through a reasonable trade idea. So it does get easier. It's like working a muscle. You do get stronger. Block out the noise. So I didn't really appreciate how much noise there is in trading, like how much information, how many opinions, how much in the news there is. With everything that's gone on in the last few months, will interest rates come down? Who will win the election? What will happen in China? There's so many opinions out there. A lot of them are contradictory. And I found I was becoming quite overwhelmed. And actually, I just found it better just to block the noise out and actually ignore some of this stuff because I didn't really know which way to turn after a while. So lean back on the process and ignore the noise, and that's the most sensible thing to do. When you start trading, many of you will know this already, but when you start trading, you put a trade on and then you sit at the screen and just watch that trade for hours in a day, watching the movements. It goes up a bit, you feel fantastic. It goes down a bit, you feel terrible, depressed. But you get to learn pretty quickly that daily swings don't really mean anything. You're looking for trends over a period of time, 20 to 60 days. Ignore the daily swings, even if they are good ones. Don't get too hung up on them, because the market is sensitive and jittery, and it does move. It does move in an exaggerated way on certain bits of information. So I just learned to ignore that and just look at the trends. You probably figured this one out already. Raise credits as you go. For every trade you put on, you should be looking at the opportunities to raise a credit, because that's what keeps your business ticking over on those months where you don't get the big wins. So without your credits, you're not always going to be making a profit. And I've managed to make a profit in every month I've traded so far. Even up to now, after the mentoring. And that's through just managing my risk, but also raising credits as I went. So that's a really fundamental thing. You can actually make good money over a year just through raising credits. And then if you get your big months, like I did in August, you start to get into the serious territory. Now the process works. Like I said, I didn't second guess it. I just kept going and kept coming back to the process when I was feeling a bit stuck. And I felt that every time I did that, it just settled me down, and I knew what I needed to do, and I just felt I was much more productive. So that's one of the benefits of doing it this way, is you do have a process to follow, and you're not following noise and energy from other people. Think broadly and outside the box. Okay, you get bits of information come through, but one piece of information is part of the jigsaw. It's not actually something you necessarily act on without looking at it alongside everything else. So what if China are putting in some easing measures? Does that mean that economy is just going to recover overnight? No. So what if Trump gets shot? Does that mean he's going to win the election? Maybe, but not necessarily. You have to look at that information alongside everything else, and just take an objective view on things, and not jump all over one single piece of information. Don't copy trade. We're told not to do that, but you invariably do it. I've done it, and I've regretted it, because I made the mistake of thinking the people I was copying knew more than me, and they didn't, or they got it wrong. By all means, pick up ideas from other people, but then start from scratch with the idea and work it through yourself till you come to a point where you're comfortable and you have conviction over whether you're going to put that trade on or not. And of course, if you get stuck, just go back to the process. For someone like me, a newbie, that's been really useful, having that process to lean back on when I got stuck. So that's me. I'll hand back to Anton.
Cheers, John. Okay, so you need to unshare, and then I'll share my screen again. Okay, awesome. Right, guys, let me know if you can see the screen coming up now. Should be able to see that, right? Okay, great. So let's wrap this up, guys. Thailand program. This is John sitting in the league table here from the Thailand program. So these are mine and Edward Sheck's students, so 18 guys. And when you look at this, guys, there's a lot to learn from these from this outcome, from a program that's held over 12 weeks with retail traders. So first thing to think about really is think about the fact that these guys were all beginners coming in as retail traders, cold from the online programs, and arriving in Thailand in the last week of April. And they're all what we would call fresh off the boat retail traders who don't really know much, haven't had any experience of doing this properly, right? And then you look back 14 weeks later, and this is the results of 18 guys. Okay, pretty crazy, right? So if we look at the bottom, I always need to look at this from a teaching perspective, and it helps you guys also understand what ITPM is all about. Okay, if you look at the guys at the bottom, so Zach and Nitty, the guys who were basically flat to small down. Now, the question is we get this a lot, like what differentiates the guys that make good money or do well and the guys who don't do well, either stay flat or are down. The thing is no one really at ITPM has a disaster. It's very rare for people to have disasters at ITPM, okay? Because in the online programs, you're taught how to not have a disaster, basically. So you get rid of all the bad habits that retail traders have just by coming to ITPM. So because you get rid of all those bad habits, it's much easier to tread water, even if you don't get what we teach 100% or fully, right? So I know when I look at this, for example, these two guys at the bottom, What's actually happening here is it's basically a failure to launch. So what's happening is they're coming from the online programs to the implementation phase where they're doing it with real money. And then over that 14-week period, they've struggled to bridge the gap between the theory and the implementation. So what's happening is the practical side of things, a large percentage of it that we teach in the classroom in Thailand, and the mentors are teaching them during the time, it's going over their heads. So what's actually happening there is the mentor is protecting them. We are basically making sure that they don't lose money when they don't fully get what we're teaching. So there's protection here, obviously, right? We make sure that people don't screw this up, okay? Then if you look above there, and by the way, these guys, once they get it, if it starts clicking into place, Nitty, for example, being down $1,400, we're trading equity options here. That number can be made back in less than a week, okay? It's really not hard. It can be made back in a week once he gets it. So it's not an issue. I look at this as like not even an issue, okay? The guys above, so let's say Weng Seng, Alessandro, they are still not fully getting it. You should not be coming to ITPM having my teaching, the other mentors' teachings in the classroom, and then over a 14-week period, and only returning 10% over a 14-week period. When you're trading equity options, you definitely shouldn't be returning those numbers with that type of input and skill around you, okay? The guys above that, these are the guys who have either got it or really got it, okay? So from Matt and above, okay? So, to see guys, opening a trading account with $50,000, $100,000, making 15 grand, 30 grand, and doing that over a number of trades where they've implemented the process. That's the most important thing. Implementing the process and getting the stats, okay? That's very impressive, for brand new guys who have just come in, okay? And then, of course, when we look at the guys towards the top half of the table, so I would say 30% and above, these guys are definitely getting it. And the guys at the top, guys like Alan, Cass, John, Porrick, they're flying. They've definitely got it. They completely understand this and know how to do it, right? And even, guys, Adam, Abdul, Fatih, all these guys, 35% and above, they definitely get it. There's no way you can put in those returns and not actually get it, okay? So these are the first things to think about. We turn the numbers of the industry on their head, guys. So, the vast majority of retail traders outside ITPM lose money. That doesn't happen at ITPM, okay? We turn the numbers on their head. This is a representation of that, okay? You look at the totals at the bottom. The group started off with 1.5 million, 1578. They've made 550 grand as a group with an average 35% return. Obviously that includes the guys who are flat to down as well. So it's outstanding over a 14-week period. In terms of outperformance against the market, if you look at the bottom table, May 3rd to August 16th, the percentage returns of the major indices. So you're looking at 8-9%, okay, for S&P, NASDAQ, and then Russell 2000, 5%. So the outperformance, vast majority of guys, you can see, if you look at the columns where it's got OU, that's outperformance or underperformance. So you basically just take 8 or 9 off the guy's absolute performance, okay? And you get the relative performance. Win-loss rates. The win-loss rates we go for, 65-35 or 60-40. Everyone's pretty much hitting those numbers. And when you look at a guy, for example, like Adam in the US, he put 300 grand in his account, made $111,000 over a 14-week period. He's got an 83% win rate. It's absolutely insane. Like, this guy's implemented the process. He's had over the period no ridiculous outstanding winners, but he's had lots of winners. Okay, so lots of small to medium sized winners. He's got an 83% win rate. That's the highest win rate I've ever had from a mentee on the Thailand program. It's crazy. Our scores. So the ratio of dollars booked on your winners over dollars booked on your losers over a 14-week period. Okay. We target minimum 1.5. So basically everyone from Tim upwards, getting a 1.5. But the thing is, the guys who are towards the bottom of the performance, even if they got one winner, because the trade count is small at this stage. So, let's say they've done 35 trades, okay? If they book one big trade, the R score moves massively. So it's very sensitive at the moment. And of course it can move the other way if they book a lot of losses. So when you've got a small trade count, 14 weeks in, the R score can move quite quickly when you book one big winner, okay? So overall, guys, this mentoring program, the Thailand program that John was part of, so far, we've been doing this now. We're going into the 10th year of doing the Thailand mentoring program next year. This is the most successful program we've had in terms of the returns. So the money and the percentage returns, okay? Most successful program. Why? Because we just get better every year, okay? So over time, we just get better at teaching. We understand the weaknesses of the traders more. We understand more how to iron out all of those issues. We understand more how to get the upside, get the best out of people and different types of people. And it just gets better and better from a school and a group perspective, okay? And overall, at ITPM, it just gets better every year outside the Thailand program. So remote mentoring programs and also guys just doing the online programs and opening trading accounts and trading for themselves. Because we now have a lot of support structures in the community, like the Discord servers, okay? So my summary, for what it's worth, as the guy that runs ITPM and the guy that mentored John, very, very pleased. I'm very happy overall with him as a participant on the Thailand program. He was a model student on the program. He listened to everything very, very diligently. It was really obvious. You saw the photograph of the classroom where basically where I'm sitting in the classroom, John is directly opposite. So imagine that dynamic for 10 days on a program in Thailand. You get to know people very well. And it was really, really obvious that when I was teaching in the classroom, that the information really sticks. It was really sticking with him, and he totally got it. Nothing went over his head. It went in one ear and sticked. It stuck in his head, okay? So, overall on the program as well, when, we're speaking every week for a couple of hours at the weekend, John's very diligent with his work, and he's very, very calm and patient. And we go through things very, very methodically. And if he has an issue, he brings it up. We talk about it. We find a solution. We move on, okay? Every week he just did his work, okay? It's really easy to mentor people who just do their work, okay? So, it might sound cliche, but if you just do what we ask you to do, it's very, very difficult for you to not do well. Very difficult to not do well. So what's an example of that? Let's say we're in call number 3 on a mentoring program. And, we're building the account up, okay? We're not up to a full account size yet. I need you to come up with trade ideas in certain areas that are, at that moment in time in the market, going to work over the next 6 to 12 weeks, okay? So have got a high probability of working. So we'll guide you and say, look, we need you to come up with a trade idea in this sector. We need you to come up with a long idea here, a short idea over here, to build the account and diversify the account, but into what's hot at that moment in the market, right? Very easy to mentor guys who do the work, okay? Not so easy with guys who half do it or don't do it, right? Because when you get on call number 4, call number 5, if you're lagging on previous calls, we can't move on to the next stage. So every week builds on the previous week. So it's like building blocks, it's Lego. To get to the end of a mentoring program and be really successful like John, we work backwards from knowing what the success looks like, and then we start with the building blocks to get there, okay? So if you do the work every week, it's really easy for us to get to the end stage. If you do half of it, it's really difficult to move from like call number 3 to call number 4 to call number 5 in a very quick and positive, successful way, okay? And there's many other things that we'll do in between phone calls as well. You know, trade ideas is just one thing, okay? Risk management, showing you how to make moves with certain positions, like looking at things in ways that you wouldn't expect, etc. So we show you how to do all that stuff. So the knowledge just compounds week by week. Now, going forward, we know John is still making money. He's doing well. You know, we gave you a snapshot here of the 14-week period on his program. He continues to make money. So he made really good money on that Ericsson trade. And I think he's still in it, still riding some of it, right?
No, that all went in August. So
October, right?
in October, yeah.
Okay.
It expired. So yeah.
That was a pretty big trade, right? So, you know, imagine a situation where you've got like 299 contracts of options on your books in a particular stock. It's huge, right? You know, things like this, when they move, you know, that stock moves $1, it's 30 grand. Massive P&L moves, right? So he's continued to make money, and I know he gets the process. You know, when you spend time with people like the Thailand program and speaking to them every single week for 14 weeks, when you get to know people, you know whether they get it or not. And John totally gets it. He's just got to stick at it now. This is the crucial period, which is the mentor leaves you after having shown you how to do it. And then as a trader, you've got to exist in the big bad world alone without any support, okay? That's the test of a true trader. Can you do it when all the doors are locked, all the windows are closed, all the curtains and blinds are drawn, and you're just left in a room for weeks on end in the dark with money? Can you turn it into a bigger number? No support. And John's capable. He can do it for sure. So he's just got to get his head down, stick at it. He should be really good. And I think after a year, if he does really well, he should be looking to get outside money from investors. So guys, if you're interested in the 2025 Thailand program, you're coming in very late to the party. We're looking for the last 3 guys, where basically you'll be taught by me, Edward Sheck, and Jason McDonald in the classroom, but Jason will be managing your mentoring program for 12 weeks after. If you can't come on the 2025 program, fine. We are soft launching the 2026 program. We're not making it public yet, but if you want to guarantee a spot on the 26 program, it's going to be April 2026. You can contact us directly through the website. The link is the same link as a remote trader mentoring program. So if you can't make it physically to Thailand, it's totally fine. You can do a remote program where you just do the 12 weeks over Zoom. You don't do the 10-day trip to Thailand. So it's obviously less commitment in terms of cost and capital. But you can choose any of our mentors except me for remote programs. So just send us a message, whether it's the Thailand program or the remote program, just through that URL at the top of the screen. So guys, I'm going to unshare my screen, and I know a lot of you have been asking questions.